IPO, boy, we're showing new offerings that came public in this busy record-setting year of the markets. Of course, Doordash and AirBNB among them are stellar performers in a year that has seen better than $140 billion raised at a minimum. When all is said and done, we could be closing on a $200 billion year of companies coming to the market to sort of test the appetite for this sort of thing. And it is very, very strong. Some say it harkens back to the height of the internet .com boom that in 1999 was looking all the rage until it started going bust around the year 2000. That was then. Many bulls say it won't happen right now. But let's get the read on all of this with Rebecca Walser, Walser Wealth Management, Erin Gibbs, Gibbs Wealth Management, and Harold Ford Jr., the former Tennessee congressman, former Merrill Lynch vice chairman, former Morgan Stanley managing director. So they're all connected, joined at that money hip, if you will. All right, so Rebecca, let's talk a little bit about people doing a little bit of deja vu here. Some worried that they love this strong response to up-and-coming companies that show strong potential, but they're worried that it's 1999 all over again. It was a great song for Prince, but the year after didn't turn out too well. What do you make of that?
Well, Neil, we do have to be concerned about the incoming administration. The regulatory, reforms that we had under Trump obviously are going to be tossed by the wayside, and I expect a lot more regulations, a lot more executive orders, obviously just a total sea change of, being very more, I don't want to say lax, but more supportive of open structures of business. And that obviously will have an impact on the IPO market. So I do think that a lot of these companies are saying, let's hurry up and get this done if possible. Obviously, Airbnb was huge this week. I mean, it was just absolutely, what they started with and what they ended with was amazing. So, I think Airbnb itself, in and of itself, is going to be okay for a while because people aren't going to want to necessarily go to the hotels because of the virus. So if you want to go somewhere, but you don't want to be in a public space, Airbnb is going to be a great place to go and get that spot. But it's going to be a sea change. And so they're racing to get it done if they can.
Erin, I take nothing away from the good business models these companies could be, but DoorDash comes to mind. It has a valuation close to, $90 billion, which is worth more than Dunkin' Brands and Domino's and more than a few other big names combined. And those are the establishments from which they deliver. So I'm just wondering, it's something out of whack there.
It is concerning. When we look at the number of IPOs, we're already at 450 IPOs for 2020. And so this is going to be a record year, if not record-breaking. And it is concerning because we do see a massive increase in IPOs, a massive increase in speculative trading. A lot of it comes from platforms like Robinhood, where it actually encourages trading and encourages speculation rather than giving you a lot of warnings when you're actually on the platforms. And we see more of these platforms. So, people that are concerned, there absolutely is a valid reason for that, in that we see new people coming to market, younger investors, and they're using platforms that aren't warning them about the risk of some of these valuations. And so, when you look at these IPOs, certainly some of them do seem extraordinarily optimistic.
Harold, the argument, and both touched on this idea that maybe this is beating Joe Biden we're coming into office when he's promised to raise taxes, raise investment taxes. Now, as you pointed out, in the past with me, that depends if he has a Republican Senate or a Democratic Senate. I get that. But do you think part of this is companies rushing to get this done while the getting's good?
No, I think a couple other things. One, if the Democrats are successful in Georgia, which I think in the previous panel, one of the panelists said that the way that President Trump is campaigning there is dividing Republicans. If Democrats win there, I think probably what will likely happen is that you'll see a re-empowering of moderates in the Senate, including Mark Warner, Joe Manchin, maybe Mitt Romney and Murkowski and others. Number two, you can't suggest that these public offerings are happening because people are fearful of Joe Biden being elected president or taking the president. He's going to be president, number one. Number two, this record is due to the fact
but wouldn't you want to go ahead and do things in a friendly market environment with the guy you have versus the guy who's maybe be a question mark?
Right, but the reason these companies, one of the reasons these companies are worth so much, obviously, is this reconfiguration in our economy. All kinds of services, particularly food delivery and software services, have become more valuable for all of the reasons that are obvious and frankly terrible in some ways because of what's happened to people. I don't think a change in regulations or fear of that. In fact, I think what was just said, that we've got to figure out ways to protect investors going forward. Maybe that's something we should take a harder and more serious look at as a country, and certainly in Congress and the president as they think about how do you protect everyday retail investors.
All right, guys, thank you all very, very much. I want to take you to Washington, D.C. right now. Stop.